editor-in-chief of Capital Finance, French leading private equity, venture capital, and M&A magazine, and a radio journalist. Thank you for being here.
Hello, good afternoon. We're very happy and very honored to be with you today and to kick off this VC Summit with a very, very hot topic, unicorns. We're going to look into this phenomenon with our two panelists, Philippe Botteri, your partner with ACCEL, and Bernard Liautaud, managing partner with BALDERTON Capital. So before we start, I would like to share a few figures with you. Currently, the unicorn landscape is made of 110 companies in the US, 60 in China, and 25 in Europe. You may have seen different numbers in different studies, but the magnitude of the difference between the three continents is anyway always the same. Another study on the valuation side now shows that the aggregate valuation of US unicorn in 2009 stood at $35 billion. Since then, it has grown by more than 20 times. So before we try and understand with our panelists how they intend or not to grow and nurture a unicorn in Europe, I would like maybe with you, Philippe, to kick off the session by asking yourself where is Europe today on this landscape and how are we doing in terms of big valuation startup?
Well, there's one thing which has been really remarkable in the first part of 2018. So if you look at the largest venture-backed exit in the US, it was Dropbox at 12 billion. If you look at the largest exit in Asia, it was Flipkart for 20 billion. And if you look at the largest exit in Europe, it was Spotify with 30 billion. So for the first time, you look at a period and you say, wow, Europe has produced the biggest venture-backed exit, right? If I've asked anyone in the room 3 or 4 years ago, do you think Europe will, in 2018, at least the first half, produce the largest venture-backed exit? I mean, everyone will look at me and say, well, let's show that Europe can produce a 5 billion exit first, right? So I think we're really, seeing a shift in what Europe has been and will be able to deliver.
And how come since then Europe was still lagging behind America and China in terms of growing and nurturing these big startups? What were the main reasons why we didn't catch up as quickly as we could have thought?
Well, first, I think what you're saying is we're not catching up as quickly as we could. I totally disagree with that. I think if you look at the growth of the European ecosystem in the past 6 or 7 years, I think the growth has really been fantastic. So the reality is, you look at the US, I mean, this is an ecosystem which started 35 years ago. So of course, the acceleration, I mean, France and Europe, really, there were a few things happening in the first .com, but really the ecosystem started to develop in 2006, 2007, with Criteo, I think started around around that time, and now we're seeing a first 30 billion outcome, just after 10 years. That's not so bad.
So you were right in making that point, but at the same time, maybe people in the audience will argue that Spotify is one example only, and maybe they would maybe also say, is really Spotify a European company, or is it a global company and we don't really care about where it was based? This can be argued. And if I ask you this question, it is whether to understand if you think that we can replicate this Spotify example on a global scale across Europe. Do we have the potential to do that? You being VCs or startups or the ecosystem at large?
Yeah, well, I would argue that any multi-billion-dollar venture exit is global. So then it's not about the US, it's not about China, it's not about Europe, it's global, right? So yes, Spotify is global, but it emerged from Europe. So I don't really buy at this point.
And so tell us if you think that we have the potential to go further down the road with more unicorns than we have today, whether that exits or just financing them for the moment.
No, I mean, if you look at the past few years, I mean, Supercell was was 10 billion. We had King, Just Eat, Zoopla. So we have several multi-billion-dollar exit, $10 billion exit, $30 billion exit, and I think this number is just going up. So just give it a few years.
And what is today you think that the condition that make that possible? Is it because entrepreneurs are better than they were before, because they have bigger ambition, because financing is available? What are the main drivers there?
Yeah, so I think there are several things that are underlying the growth of the ecosystem. I mean, first is the fact that we're seeing an increased level of experience with repeat entrepreneur and successful entrepreneur being angels and helping nurture the system. VCs who are global in nature and are providing an experience to get this startup to the next stage. The second thing is we're seeing a lot of very talented people attracted by the venture path and working for startups. And if you look just in France, you look at the top university and grandes écoles, 20 or 30% of the students now are going to work for startups instead to work for industries or banking or consulting. So the talents are there. Third, the level of ambition, I think, has really, really increased. I think now it's not about, well, I want to try this business and raise a couple million euro. It's about how can I become a global leader. And they don't want to be a unicorn and $1 billion company. They want to say, well, how do I create a $10 billion company now? And they want the VCs and the mentors and the people around them to help them achieve that success.
So that the shift in the mindset and also capital available as well to support their ambition, of course.
Exactly.
So we now have a much clearer view on where Europe stands on the unicorn front and on its ability to keep doing that. But I would like to take a step back with you, Bernard, and I'm going to quote you here. So listen carefully. Unicorns, I'm quoting Bernard now. Unicorns are a smoke screen. The key measure of success is the actual size of the business. You can have a very small business that attracts $1 billion valuation because one investor fell in love with it. What are you doing on this panel?
Well, I'm building the next very, very big company, the one that will have a $50 billion valuation.
So you think the unicorn thing is not a relevant way to look at the market and potential of startups?
I mean, it's not completely irrelevant in a sense, like for an investor, if you invest in a company when it's worth 20 million and you exit at a time when it's $1 billion, it's usually a good outcome, right? But I think what we're trying to do is actually grow a large company that will have a sustainable impact on the economy and that will become very, very big enterprises for the long duration. So to me, a better measure is their revenue, is eventually their profit. But I think we should look for the bar afterwards is to create companies that do $1 billion in revenue and continue to grow at a pace at that level. And I think if you look at the number of companies, like new companies, that have passed that bar in Europe, there are not that many. But I believe we will get there.
So you think it's not correlated? It's not because you have a $1 billion plus valuation that you're going to be able to build a sustainable business?
Not necessarily.
Going
No, I mean, again, we have grown. We've participated in a journey of companies that have grown to $1 billion in valuation when they were doing $50 million of revenue. So they were relatively small businesses, but they were on a very hot market. They got acquired for $1 billion, but then their story as an independent company ended up there. So it still have an impact because now they're part of a larger ecosystem and so on, but they're not the next Facebook or Spotify or other. I mean, Spotify is a very big valuation, but it's also a very big revenue business. They do more than $1 billion of revenue per quarter. So they have a huge impact. To me, that's what obviously we should look for, is that can we build over 10-year, 15-year periods companies that are becoming the next European giants. And our belief at Balderton is that the next European giant will be a tech company, and then we'll go to $1 billion, $5 billion, $10 billion of revenue, and that will have a really durable impact on the economy.
So we'll get back to you in a minute on how you're going to build these companies, but I would like Philippe to react on that. It's hard not to agree with Bernard in a way, saying it's healthier to have a sustainable business that maybe articulate at some point a $1 to $5 billion valuation that might be going down in the next funding round, which happens in the markets. What would you reply to that?
No, I mean, I think valuation is always an interesting topic to discuss, you know, whether a company is worth the price or not. But the way, when you're an investor, you don't think, you know, it's not a public company where you buy today, you can sell just 5 minutes after at a different price, right? We're investor in the long term. So when you put a price tag of $1 billion on a company, what does it mean? It means that you think that the chances, that there are good chances that this company at some point is going to be worth $5 or $10 billion or more. But it doesn't mean it's worth $1 billion, because when you invest, you also need know that it has a chance to go to zero. So you look at the probability of outcome and you say, well, given the probability of outcome, I think I can put a price tag and statistically still make a good return if I invest in, you know, 5 or 10 of them. So that's a way to look at it. So does it mean a company is worth $1 billion? No. But it means that this company has a chance of having a $5 to $10 billion outcome. And one thing which is particularly interesting, the reason why we're seeing valuation increasing is because of the fastest adoption of technology, the outcomes that we're seeing right now are much larger than they used to be. And therefore, you have the chance of getting this big outcome, and therefore you can still pay high prices and get a good return.
And you were talking statistics a few minutes ago. I read somewhere that ACCEL invested in 33 unicorns since the beginning of this venture. What is the statistic compared to the rest, to the global investment, to the global portfolio you had? And how do statistics verify there? Do you have that in mind?
Well, I mean, I think we're very happy to to be an investor and back 33 unicorns, and we're very happy this year that we were in Dropbox, Spotify, and Flipkart. So it's been a very good year. Now I think we'll let our investor judge whether the returns are good or not.
We'll get to that later on. I'm going back to you, Bernard, because you were mentioning, in a way, capital available to grow ultimately this big company. Obviously, this unicorn phenomenon has materialized because there's so much money in the late stage capital market. So do you think that this going to be the case for the rest of next few years? Do you think there will be even more capital available to this company? Do you think too much capital go into too few companies? What you're feeling on that? On the way you direct the capital to this company?
Yeah, I mean, so first of all, it's clear that there is a substantial amount of capital going into the VC and then, so VC at the early stage, but also much more in the late stage. We've seen with the Vision Fund of SoftBank, 100 billion. They're now raising the second one. Their vision and their strategy is to say, if we put massive amounts of capital behind a small number of companies, these companies have an unfair advantage to win when it is a winner-takes-all kind of category. It doesn't work for everything. There are plenty of categories in the industry where you have competition and you can have multiple companies succeed. But there are some others where you can apply that strategy. So there's plenty of money. I would say, if you think about the companies in the US that are above $50 billion of market cap, they have raised on average $7.5 billion. You look at Uber, they raised 11 plus, etc. On the European side, our biggest companies have raised on average 1.5 billion. So we have raised, for our champions, we have raised about a fifth, right? So there is still somewhat of a disconnect, but it's primarily, I think, as Philippe explained, I think we're at a different stage of maturity. So Silicon Valley is more than 50 years. We're more than 15 years. So we're catching up, but I think we're on the right track. So I think money is not the object. By the way, we don't care where that money comes from. And the money that, when you raise 100 billion, I mean, the SoftBank Vision Fund is based in London, but they invest everywhere, as we can see. So it becomes, at this size of companies, it becomes a complete global game. What we need is to have a different mindset where entrepreneurs are saying we want to create, again, companies that are going to dominate in their space on a global scale and for a very long time. I think Daniel Ek at Spotify has that vision. We just need a few more, and we need to have also a mindset change in the entire ecosystem. So investors need to take more risk and need to want to go all the way. So investors, entrepreneurs, but everybody and also government needs to push that so that we create, again, very, very large businesses.
And according to you, Philippe, is this exuberance, abundance of capital on the late stage market, is it a problem for exits? Because it's easy for a company to choose to remain private and not go for an IPO or for a trade sale and just raise another bigger round next year. What do you think? Do you think it's slowing down the exit really? And so for you, you need to hold the company longer?
Well, I think there are different stakeholders here. I think the number one stakeholder you need to pay attention to are the employees, right? Because for the employees, at some point, they, even if they've been working for successful companies, they want to move on. And so the part which is important is make sure that when they move on, they have access to liquidity because they are the one who need this liquidity first. And I think one of the good things about this late stage capital is that it also creates liquidity because there is a lot of secondary happening as well. So I think for the employee, which are the most important, I think this is, and the founders, I think I don't see this problem of liquidity happening. No, I think for the VCs, we are very long-term investors. Our holding period is, around 8 years, so we are very patient. For some of the earlier stage funds who are looking for a sooner exit, an exit sooner, they can actually participate in this secondary and get liquidity, and that's not a problem. So, yes, that means the IPO is going to happen later, but I think this late-stage capital also provides liquidity for a lot of the stakeholders who need it.
Thank you very much. I suggest, because there's only 3 minutes left, to take a few questions from the audience. I don't know if we can have the... I don't know... can we have the... Is there any question from the audience?
They're there.
Philippe, vous pouvez lire ou pas?
Yes. So, first question is, shouldn't the question really be whether Europe will produce the next most innovative company and not whether its startups will have the highest valuation?
Would you like to take that one?
I can take it if you want. I mean, I absolutely believe that we have now all the conditions created for this. I mean, we have always been extremely innovative engineers and designers, and so we have the people. We have the people who have the creativity capacity, the innovation capacity. A lot of them actually have created their businesses in the US. Now they feel that they can do it here. So it's more giving them, I think the environment is ready in terms of ability to grow a business, ability to go global, availability of capital. So I personally believe that we will generate extremely innovative companies out of either France or any other European country.
Thank you. Philippe, I suggest you take the second one, Flipkart.
Sure. So the question is it fair to compare the exit valuation of Flipkart, which is only catering to a domestic market, versus Spotify, which is a global company? I'm not sure what you mean by is it fair to compare valuation. I mean, the reality is that both companies, what they have achieved is something that is extremely hard. I mean, if you have been to India, you look at the market, you look at how the infrastructure is, and developing and the payment infrastructure and developing a business there is quite challenging. And if you look at what Spotify has done, developing a business globally has also been challenging. So honestly, I'm not sure how I can answer that question. I think I have a big respect for the entrepreneurs of both companies.
Let's take the last question about bubble. Is there a bubble out there, and is it going to burst anytime soon?
So I don't think there is a bubble, in my view. I think we are in a vibrant moment right now where there are lots of really exciting companies that are growing extremely fast and based on real metrics. You see that on the consumer side, you see that on the B2B side. So they are real businesses. It's not like it was in 2000. And there's plenty of money. So it's heating up, but it's not at crazy levels.
Do you agree on that? Philippe? Of the,
Yeah, I think I would agree.
it's
I
not
think
an overrated market.
vibrant is a good qualification for this market, but you have to keep in mind that venture is in cycle, and right now, yes, we are in a good part of the cycle, and then at some point there's going to be a downturn of the cycle, but it doesn't mean that there is a bubble.
And you would say that across the different stages of venture, you don't see any segment more more bubble at risk than other.
I think in a market that has a lot of investors, investors who have a lot more money than before, most of the funds in Europe have almost tripled in size compared to what it was 2 or 3 years ago. So companies and so venture firms have money to spend, and they will spend it. So there is competition. So on hot deals, you will have valuations that are that will take maybe 2 or 3 years to build into. So hopefully there will be not too many misses there. But it's not like a generic bubble.
Okay, thank you very much. You can give a big round of applause for our great panelists.